Hi, my name is Sue White. I teach finance at the University of Maryland. Today I'm going to go into a little bit more detail about how to apply ethics codes and standards and how to correct ethical violations. What I'll be doing is going into more detail and explore some of the concepts behind the CFA Institute Code of Ethics and Standards of Professional Conduct. The first thing I'd like to do is explain what a profession is. Codes of ethics generally are part of professions as opposed to a business or a trade. The idea behind a profession is that there's a known body of knowledge, and the second idea, that there's a concern for the common good. Let me explain how these two ideas apply to the profession of investment professionals. First of all, investment analysis is certainly based on very extensive finance and economic theory. It uses mathematical and analytical techniques. Investment analysis knowledge continues to develop. People are always developing new theories and new ways and continually advancing the field. Investment analysis certainly serves an individual's self-interest. You have the reward of potentially high income, challenging work, a great work environment. However, in my opinion, investment analysis also benefits society as a whole. When resources are efficiently allocated throughout the economy, wealth creation is encouraged. If you have assets that are correctly priced, then resources are going to flow to those assets. And investment professionals help in this process. Investment professionals price assets and make sure that money is being spent wisely. The second area in which I believe investment professionals do help society as a whole, for many investment professionals, they work with clients, maybe individual clients, maybe pension funds, mutual funds, work with people who are investing. And they help those people in their goal of wealth creation. So again, the investment profession is a profession. It does draw on a known body of knowledge, and it helps society as a whole by allocating resources as efficiently as possible. Next, I'd like to talk a moment about law and ethics. Investment professionals must be aware of the laws that apply to their work. While most investment professionals don't have to be legal experts, they have to at least know what rules to follow in their day-to-day work and know when to ask for professional guidance if it's needed. Two basic points that I'd like to make. First of all, if something is illegal, it is also unethical by definition. However, a legal action could also be unethical. And let me give an example of this. Suppose you have a situation where you are an investment professional advising your clients. It is certainly legal to suggest that your clients invest in the products that your company sells. However, it would be unethical if you only told the client about those products and didn't explain about any alternative products that the client might be interested in. You need to know the ethical responsibilities of each standard of professional conduct. Basically, how to use the code. Ethical behavior often is not clear-cut. The Code of Ethics and the standards, like most codes, use terms like integrity and respect, reasonable judgment, in a professional manner. These are not precise terms. They're not very clearly defined concepts. You may need to take some effort in order to understand it. Basically, it takes training and practice in order to recognize ethical questions and then resolve the problems ethically. The first step in ethics is to figure out what's the problem, what's the question, figure out which particular standard applies in a particular situation. Then take the generalizations that are contained in the code and apply them to your specific situation. Then figure out what actions are going to resolve the ethical problem. At all times, the professional should be considering the needs of the client. What actions would the client like? The analyst then has to look, will this action enhance his or her reputation or the firm's reputation? And finally consider, does this action set a good example and does it exemplify good leadership? You also need to know what violations of the codes are and how to correct those violations. The CFA code and standards apply to CFA members and candidates, and the CFA Institute can revoke a membership or take other sanctions if it finds that the code or standards have been violated. Typically, the first step is a review panel. Then the review panel will determine if any kind of a sanction is necessary. The sanctions can take the form of dismissal of the complaint, perhaps a cautionary letter, some kind of a warning, or various points of disciplinary action. Now, basically what happens, every investment professional, every CFA, needs to send a report every year to the CFA Institute saying, it's a professional conduct statement saying any challenges to a member's professional conduct, for example, any legal or regulatory proceedings. Also, if the CFA is notified of a violation, if someone reports a member, then, as I said, the first step would be to institute some kind of an inquiry. The inquiry, the review panel, will generally look at the charges, maybe have interviews, take statements, look at documentation supplied by the member, the person who complained, and perhaps third parties as well. Then, as I say, the outcome can be dismissal. There's no grounds for any further action, a cautionary letter, or various disciplinary sanctions. The lightest disciplinary sanction is a private censure, a non-public warning issued to the member. Other sanctions could be public censure, suspension of membership, revocation of membership, and revocation of the CFA designation. Now, next what I'm going to do is explain about some examples, give you some examples of possible violations, and then discuss what those violations are and why these were violations. What I'm going to start with first is a presentation of some scenarios, some mini cases showing a situation, and then discussing which part of the code did this violate, which one of the standards did it violate, and why. Now, one thing to keep in mind is that basically what you need to know is what are general ethical and unethical behaviors. You certainly don't need to know any of the details in any of the cases that are presented. Again, the idea is to have an understanding of how potentially unethical and unprofessional situations can develop and how to correct those situations. Again, you will be looking for what are the key violations illustrated in each of these many cases. So let's look at some cases. Let's take the case of Christina. Christina has decided that she's going to leave her current employer and start a brand new job. The job is with Brand New Asset Management, and one of the reasons that she's moving with them is that she has developed an incredible expertise in being able to forecast the direction of short-term interest rates. What she has done is she devised a proprietary probability model that's able to input a variety of economic factors and figure out what way the federal funds rate is moving. Are interest rates going to go up or are interest rates going to go down? Given the current volatility in the market, Christina feels that rates are going to trend upward in the near future. During her last week at her former employers, she made copies of her model. She felt very strongly this was her model. She created it. Nobody else helped her create that model. It was all hers. And she felt that she had the right to take it with her to her new employer. During her first week at her new employer, the firm's legal team and ethics counsel paid her a visit to explain what the ethics code was at her new firm. They became very concerned when they realized that she had taken that interest rate model from her old firm without written consent. Christina assured them, no problems. I did this model all myself. This model is all mine. Is there a violation? Yes, there is a violation. Christina should have listened to the lawyers in this case. It is a violation to take any property from a previous employer without express prior consent from that employer.